it felt like there was some buying coming in. Technical analysts would believe that was a dead cat bounce. But there were a few analysts, fundamental analysts too, who believed that, maybe now is a good time, we're done with the correction, back in business, time to go out and shop. Seemed a little far-fetched, to be honest, to me on Monday. And I feel like even now as we look at it, do you feel better opportunity to buy will come, or is it time to start allocating incremental capital in this market?
So I think, Samina, the right way to look at it is what kind of realistic return expectations you can expect from the headline index over the next 1 year. And I think that's probably, going to be the key determinant of any investment decision that you make when you compare it to other asset classes like fixed deposits, real estate, gold, etc. My sense is that we are at a pivot point around 24,000 on the Nifty. And, none of us have seen a boring market for a very long time. My sense is the next 1 year could be very boring. I think you could probably land up in a slightly longish range of 22 to 26,000 on the Nifty, which is why I said you're pretty much at a pivot point at 24. As Andrew was rightly highlighting earlier, there's a very important global event next week in terms of the US elections. But I go back to the earlier point I was making, Samina. I think the most disconcerting part has been the earnings season this time. And I think, we still have 15 days of results left. We don't know how bad it's going to be from here on because there are not too many green shoots emerging. In India, inflation itself, it remains a big question mark. Do we even need to cut rates? I think, people were anticipating a rate cut by October, but it doesn't look like it's going to happen this calendar year, let alone this fiscal year. So I think it's going to be a very boring market. It's going to be a very stock-specific market. Yes, there is certainly some pockets where value has started emerging, no question. But I think to be expecting anything more than a 10 to 15% return over the next 1 year in this earnings backdrop is highly unrealistic, in my opinion.
Andrew, what can change this? I mean, 2 months, we have a quarter which is bad. Some optimists argue that the government spending hasn't happened and that has had an impact. Once the government spending comes back, and people believe it will, there will be a bit of a recovery. So maybe Q3 also is a bit of a quiet one, but then things may turn around because we're still a growth economy and a growing economy. So what turns this around? Is it a correction to maybe 24 or 23,500 or 23,000, or is it something else?
So Niraj, it's an easy one to answer in the respect of that. I'm not sure what can turn the market around. And I'll tell you for why, is that all the factors, and Rahul mentioned them as well, is that, we're all expecting interest rates to come down. That doesn't look as though it's going to happen now. I mean, I've been the most optimistic on this, and I just don't see it happening in the next quarter. So there's no respite for the banks. And that's one of your biggest, kind of weightages in the index. So there's going to be no earnings upgrades, no thinking about earnings upgrades for the banking sector. If former President Trump gets in, then there's going to be huge worries about the tariffs that could possibly come into the IT sector and pharmaceutical as well. So 2 places to hide have just disappeared, and your third, the banking sector. So 5% from here downwards is an easy thing to think of. And then unless the government does start spending, which is going to be probably very late on in the year, there's no multiplier effect. It all comes into 2025, and the world could be looking a lot different than then. China is looking more resilient now after the stimulus packages. There's more to come. So I don't see FIIs rushing to India, even though you've seen some fall in the market. It's just not big enough to get that valuation to such a point where you say, yeah, this market's good and it's cheap and we know earnings are going to pick up. So I'm not sure there's anything in the very short term, Niraj, which can turn the sentiment around.